Afternoon, everybody. Steve Georgia here, live from Allendale's Trading Floor. It is June 9th, 2010. We had kind of some slow trade in the grains. We did end up finishing corn a penny higher today. Had beans up about 12.5 in the old crop, up 2.5 in new crop. Had the wheat market actually down about 4.5. A lot of questions to me on why was wheat down 4.5 cents. I think there was just a lot of talk of a huge crop here in the Southwest, talking some pretty big yields and good-looking crop. We've known that for a while, but today was kind of lighter volume. We've got a report out here tomorrow at 7:30 in the grains. Today was maybe a little bit of short covering for corn and beans, but something that did affect the beans today is that you had China come in and buy old crop beans, they bought new crop beans and bought old crop bean oil. So we did have China Wednesdays, as people are coining the phrase. We had China in the markets that sparked the beans today, and we did get a little bit of life in here. But we'll see what the report has to say here tomorrow. They are expecting more of a neutral to maybe slightly bearish in beans, maybe a little bit friendly yet in corn. But overall, in the grains, you're fighting farmers selling. So especially in corn. You've got farmers out there that need cash. They're out there selling cash, and that's pushing the market lower. You've got, typically this time of year, you've got the funds that are driving the market higher, and also you've got, you got spec guys trying to push it higher too with more of the what-if theory. But we know the crop looks great out there. You've got farmers out there selling because they need the money, and that's what's keeping a cap on the market at this point until we see some kind of change. We'll see if this report tomorrow has any fundamental change for us. But as it stands right now, rallies are still probably selling opportunities in the grains, and we'll see if what this report has to say in the morning. But today as well, what kind of supported things? You had crude oil up $2.20. So very strong day in the crude. We had some resistance, or our next area of resistance in crude is near that 75 area. But when you stand back and you look at the energy complex as a whole, today was a pretty strong close in the crude. It's the first time that we closed above that 20-day moving average since May 5th, so over a month. So you're finally getting some strength. We're getting back above some of these moving averages. You may find some more money come back into the market versus rushing out like we have seen for a while. So technically, the picture has changed a little here today. It was a strong close, but I'm looking for a close back above 75.75. In order to see any more strength at this point. So we have sold off the highs a little bit, but overall, we're up $2.20 today. Pretty strong close in crude. We need to try to hold that again tomorrow to try to get more of the spec money back into the crude to push things up a little bit. The dollar today, helping out. We're down about 60 cents in the dollar, but at one time we were down more than $1. So we have come back off its lows. We did go up, looking at some charts, we went right to this uptrend line for the dollar. So technically, that was some pretty good support right near these lows, down below that $88 area. So we found some support. That may end up, if we can hold that again tomorrow and hold that uptrend tomorrow, the dollar's still in an uptrend. The euro is still in a downtrend. Is the situation in Europe going to correct itself anytime soon? Probably not. So with that, I think today was just more profit-taking than anything and has had pushed the dollar down. But overall, until we can take out that trend line, you're still going to find guys buying up against that trend line and in the euro selling up against the downtrend line. So that spread should continue to narrow in and give some more strength to the dollar. So continue watching that. If the dollar is going to continue to go up, it'll probably put pressure still on commodities in general. And like I said, it may end up putting pressure on crude as well. But we need to see a technical close back above that 75.75. For the week, it looks great, but we need to see that strength in order to keep things rolling. In the soft markets today, a lot of reaction to the dollar. The dollar being down, soft markets are up. You had sugar up 24 points, went right up to some good resistance as well. And it trades very well with that dollar. If the dollar's going to be up tomorrow, I wouldn't be surprised to see sugar down. Cotton was limit bid today. We were up limit. We're up 300 points or 3 cents. The reason for that is you do have some short covering ahead of this report tomorrow. The USDA reports we've seen a lot of fundamental change over the last few reports, and you've got guys that are kind of scared at this point. We've seen a nice run down here, seen a nice pullback in the cotton. we may end up seeing, and what I think we saw today was more short covering ahead of this report tomorrow. If it comes out and we see a lot of change tomorrow, that market can go either direction very quickly. But volume was rather light today, but we were able to stay up limit at the close here today for cotton. Coffee was up about 105 points today as well. A nice little bounce. We are still in a sideways range in coffee. We've gone up and hit that upper end of the range in the July contract at 137 to 138. We've got that lower end sitting at 130 to 132. We have not gone down there just yet. Today's reaction was mostly due to the dollar, where if the dollar, as I explained earlier, the dollar's higher, you're probably going to find a dip in coffee here tomorrow as well. As far as the livestock, you had fat cattle down 30 cents. It spent most of its day higher today, but right at the close ended up selling off and finding more of a pullback. And we did end up closing lower. We may see some follow-through selling tomorrow, but the feeders were up 35 cents today. The hogs, we kind of had some mixed trade in the hogs. You had hogs down 17 in the June contract, where you had your midday prices that were a little bit lower. Your Iowa, Minnesota price that was a little bit lower at midday, I think, kind of capped that nearby contract a little bit. But as far as the July and some of the deferred contracts, we were higher. July was up about 27 to 30 cents, and as far as the deferreds, we were up as well. So the only contract really that was down that had a little bit of pressure was that June contract. So we'll see what that brings here throughout the week. But give us a call with any questions at 800-262-7538. Our web address is allendale-inc.com. And give us a call with any questions. Be glad to help you out over here. Hopefully you guys had a great day today. Have a great rest of the week. And go Blackhawks.